Welcome to another episode of the Straight Up Chicago Investor Podcast. I'm Tom Shellcross, licensed agent with Second City Real Estate. With me as always is Mark Ainley, founder and owner of GC Realty. Mark, been a while since we recorded. Good to see you.
It is. I almost jumped in and did the intro just because we did the 200th episode recently and I got to do the intro. So
No, you got to wait for special occasions.
You got to wait for special occasions. What's going on in your world? I know you were talking with some investors the other day about price per door.
Yeah, we had an interesting conversation. Everyone looks at different metrics, and I don't want to say there's a right or wrong way to do things, but and when a broker is telling you it's this price per door, like it's kind of a meaningless statistic. And that's why I was trying to get into the head of someone who is, more newer to the game. So two things here. One, like you could have a 3-1 compared to a 1-1. You could have, a boiler building versus HVAC. Like it's just like a very loose way to look at things, and I wouldn't give it any merit whatsoever. And the other thing is, a broker, his or her job is to sell the building. They're not doing anything wrong. That's their job. They're going to pick the metric that sounds the best. So if they're selling, a bunch of studios and 1-1s, they're going to use the price per door metric, right? Yep. If they're doing something that maybe is in a more C-class area, they're going to do, this is at a higher cap rate, or, they're going to amplify the thing that makes the building look the best. So instead of just rolling with that, you need to set your own parameters of what you're looking for, and go from there. So it sounds so simple, but like I ended up having like a 30-minute conversation on this thing, which is way too long.
Yeah, no, for sure. If you're a developer, a rehabber, or a flipper, or a burr, and you're trying to figure out your average costs of doors over time to kind of see what you're looking at, that's where you use costs of door, your average cost of door. But if you're trying to buy a building, that's tough to do because, just based on rents and income and expenses, it's like you said, it's just way off.
Yeah. So I already did a rant on gross rent margin before, so I'll shut up now. What do we got for the housing provider tip of the week?
Well, it sounds like you just like hijacked the housing provider tip of the week. That sounded like a housing provider. But now for me, the housing provider tip of the week, we have, and I see a lot of everyone out there installing the electronic locks for on their doors, front door, back door, and they're using this keyless entry and the combo. I heard a best practice the other day by a larger landlord that's got scattered site. If you do this all on one site, it might not work as better, but for scattered site, how he tracks it all is he uses the last 4 digits of the incoming tenant's phone number to at least set up a baseline for what that code's going to be. That way he doesn't have to track it. And if he ever forgets to write it down, you can always refer back to it. So I thought that was pretty cool, and I figured I would share that with everybody.
Got it. So then like the, maintenance needs to get in there. They can just look up in Ffolio or whatever it is, the tenant's number, instead of having to go to a separate page.
Yes, exactly. So
that's nice. I like that one. All right. So first off, thanks to Luke Blonick, who's back on at episode 190. He made this introduction. If you haven't listened to that one, it's a great episode where we dive deep into Logan Square. And when it's done, I said, Luke, great episode. Do you have your counterpart in, Wicker Park and Bucktown where we can go, block by block? And he said, I got the guy for you. And that guy's here with us today. So our guest, he has cut his teeth at the Board of Trade before jumping into this industry about 20 years ago, both as an investor and a broker. His team did over $140 million in sales last year. He's been recognized as the top 1% of all realtors in Chicago. Over the last 20 years, they've done over $900 million in sales. So this year, sounds like they'll be over that $1 billion mark, which is a huge achievement. He moved to Bucktown in 97, has known the area better than the back of his hand since then. So without further ado, Jason Stratton, welcome to the show. Jason,
thank you.
How you doing?
So much. Thanks for the warm intro and the actually tips you guys just talked about. I kind of like that a lot.
Yeah, I like the door one. That was
I like the door one, and I definitely agree with you on the price per door. It's just like any way you can minimize doing work. I think sometimes brokers do it.
Yeah, it's lazy. It's too simplified.
Yeah, it is. It's like you said, whatever helps their cause, right?
Yeah, which is they have a job to do. Like I'm not. Yeah. This isn't rattling on them, but So yeah.
Yeah, the other thing is that you'll see this is the highest price per door in the area. It's like, yeah, but also it's 3 times as much income as everything else that's sold too. So we're done.
Yeah.
Well, I'm going to bring it up at like the 30-minute mark. Just bring it back.
Yep.
So Jason, you had an interesting start here, man. You were on the Board of Trade. Talk to us about, you come to Chicago, you're on the board. How just talk about that experience coming to Bucktown. Like, what was it like in '97? And then from there, what was the job like, and how did that eventually end up? Yeah, how did you go from there to, hey, I want to own some property?
Yeah, I mean, first, I guess so. First and foremost, before as I came back from California, I was recruited to trade options because of my math background, and kind of just that's kind of a little bit of my forte, which, to tell you the truth, has really coming to play in terms of multi-units and assessing risk and profits and stuff like that. But we all came to Bucktown in the mid '90s. I mean, this is where you came for hanging out, having fun, give me high lounge. I mean, the borderline. I mean, the bars were fantastic. The scene was fantastic. Coming from the West Coast, spending so much time in California and LA, when I came back, my parents lived in the Gold Coast. It just Bucktown was just, I have a lot of tattoos that kind of matched the area, kind of matched the people that I hung out with. And when I got to the trading pits, we started out as a clerk. When I was a clerk, all the traders, everybody lived in Bucktown, and it was the spot. It was, it was west of the highway, so it was edgy. Yet you had big spaces, and the nightlife was fantastic. So it's still a great place. I lived here, since '97, so I love it. It's definitely changed. And it's funny, it has changed. I'm 49 years old, so Bucktown, since '97 to now, has literally changed every 5 years, as myself being 49 and a crew of us from 45 to 55 have changed along with it. So as we've changed, Bucktown has changed with it, which is really interesting. Which is kind of interesting to see how Logan and Avondale have changed along with that, but that's a different discussion. So when I was in the Board of Trade and eventually made my way over to the Mercantile Exchange, at that point, when I got to the Merc, my father had passed, but it taught me a couple of good lessons. And one of them was, just don't double dip. If you're doing, if you're trading, high volume trading on the floor, how can you allocate and diversify your winnings as you bring money in? And when I thought the best way to do that was, and I was taught, was real estate in terms of holding hard assets, which I just like to call brick and mortar. And my dad always told me, own dirt, the one thing they can't make more of. So the earth is limited. It's not getting bigger. So I've always had that appreciation for real estate. And I could tell you the best thing about trading, for me in the long run, was able to look at a situation, be it for my clients or for myself, and have that gut feeling that this makes sense or it doesn't make sense. And I've always taken that approach to everything, especially to Bucktown. And when we got into Bucktown, it just made sense. Everything about Bucktown made sense to me. Like, I have that warm feeling, to lack of a better word, when I know a trade is going to make me a lot of money, and you've got that feeling. When I know that the trade's not going to make money, you listen to yourself. And that's kind of how I was with Bucktown. And that's how I've been in my career and with my clients too. So that's kind of how I transitioned, buying real estate while I was in trading. And as a trader does, they trade. And as I felt the markets.
All right. So Jason, talk to us then about the first deal, right? I understand the mindset here. That first one though, like, did you have that same confidence? Did you have that same mindset? Because a lot of our listeners are in that shoe now. Hey, like, should I do this or not? Right? And it sounds so easy now where you are, but 20 years ago or whatever it was, walk us through that first deal.
Yeah. I mean, I never, and this may be just my background, my feeling. I was a little bit of an athlete when I was younger. I just never had a problem with that, like, leap of faith, as Kierkegaard would say. I'd never had a problem. So like, when I saw something, I felt that it felt good, and I was committed to living in Bucktown. And I remember the first deal I did ever, it was at St. Paul. It was on St. Paul and Labansia over by Clock Tower Lofts. I remember when I went to contract on that, I was like, all right, let's do it. I've always had that, what's the worst? I know this is terrible, but like, what's the worst thing that could happen? I have an asset. I could rent it out. If poop hits the fan, I can go live in it. I just never was really nervous about it. I just knew that I'm looking at an area that has everything. And first off, I've been in the area. I've been hanging out with friends and been at the bars and the restaurants for the last 3-4 years. I enjoy it. I know demographics is everything, like, to me. So I know who's moving here because of all people I hang out. And I know they're moving here and I know what's happening to the area. I know that money's coming into the area. I don't care what Bucktown looked like in 1997, and it was not nice at all.
Well, I was gonna say, what's the price point here? Where do we at?
This was not like, this was $275,000.
For what?
What does that lot go for today? Forget the building. What is the vacant lot?
That's, that's the building. That's not the lots were $60,000.
But I'm saying, like, today, what's for our listeners who are unfamiliar with Bucktown, what is the cheapest lot? What's the cheapest thing you can buy in Bucktown right now?
The cheapest lot it'll be 24 by 100, so it won't be full size. But the cheapest lot's maybe 475, unless you're under the out. A normal lot, 25 by 125, you're lucky if you can. First off, you can find one. You're like, go to Vegas. But if you can find one, they're 650, 700.
Yeah. So just to put in perspective, man, that's crazy.
$60,000. So, and I will tell you, from that one place, it's $275,000. I bought over 25 places from one place.
That's awesome.
It's just a matter of, you gotta get in, right? And you're not going to be like, I got to tell you, we're going to go off script here, or I'm going to take a little bit of a rant. And this is like the price per door thing. Like, everybody wants this secret formula, like spreadsheet. Everybody's got their spreadsheets, this, that, this. Listen, it either makes money or it doesn't. And does it matter to you if it makes $20 less or $100 less? No. Grab the asset. Hold on to it. Have people pay down your debt. And you're always going to make money. I don't care what happens to the market. I just don't care. It's always going up because it's a scarce resource. I don't care. If you have time on your money, I had a trader once tell me, he's like, this is a losing trade. I go, oh, it's a loser. He goes, well, it has to do with time. He says, if you've got time and you're patient, everything that's a loser is eventually a winner. It just matters on your ability for time. And you have to evaluate that when you get into a deal. When you buy a multi-unit, it's not for today, it's not for tomorrow, it's not for 1 year, 2 years, 3 years. You got to have the proper mindset on how much time you're going to have that asset. And in 7, 8, 9, 10, 15 years, man, that asset is going to produce so many more other assets. And I think people are crippled by the inability to understand that time is on your side, and that if you don't have patience, you cannot make real money.
Yeah.
I don't know. That was all over the board.
No, I agree 100%. It's especially, I'm sick of answering the questions that people come like, oh, how do you invest in the north side of Chicago? Cap rates are so compressed. And it's like, well, I don't know. Things are going all right up here, man. Like, I don't know the alternative. Like, and I don't know how to answer this without being a jerk.
You know what? My man, I will tell you the things that I'm seeing from people that are searching in Bucktown, my clients too, who I try to coach, is that everyone wants to buy stuff on high margin, right? Which is fine. That's what's awesome about real estate. You put down $100,000 and in 5 years you make 500. You're not doing that anywhere else. Buy it stocks. I don't care what you're doing. You're not making as much money in real estate in any other asset class. End of story. Unless you're some Mensa, you make the metaverse or something, but you're not making any more money than you are in just real estate's the number one thing. And everybody looks at cash flow and they're like, well, how much money am I making? And I'm like, dude.
It's like judging a stock by just the dividend, right? Like, it's just, yes.
You leverage to the yield, bro. How much money do you think you're going to make when you're only putting 3.5% down? The fact that you own an asset for $10,000 that's worth $500 and the debt service is being paid down by the people that live there, dude, you should be ecstatic. Anyone starting out in real estate that thinks they're going to make a ton of money on rental income, you're sorely mistaken. That's not going to happen unless you have a lot of money and you're buying things for cash and you have no debt service. The fact that you can own real estate put 3.5% down, 5 to 10, whatever the hell it is, put that money down and have the building pay for itself, plus on top of it, add equity to it. And besides all the tax write-offs you get, which is a whole other thing, you're insane. Unless you own 6,000, 7,000 units, you're not making money off rent. You're making money off the dirt.
Yeah, no, I know.
They have the complete wrong mindset. Because everybody wants it like this, right? I want money, 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 money. Okay, then put 100% down, fight for cash, and then take the money.
Yeah, no, I love it. It's you're speaking my language here.
It's just ridiculous. And the problem is, it's like when I'm selling stuff, we're at buyers in Bucktown and they're looking at this, oh, it only makes 5% or makes 5.5%. I mean, where else are you going to make 5? First, I think this is the biggest mistake they make. They don't look at all the aspects of the thing, right? So they only look at the 5.5% they make on cash, but they're looking at cash and back, right? They're not looking at what they make and what's coming out. Then on top of it, no one takes the debt service as profit. How is that not profit? How is it not profit when someone's paying down a mortgage? That's insane. And then in 15 years or 20 years, you own the asset free clear. That's money in your pocket. I don't get it. Everybody's crippled now because they evaluate an asset the wrong way. They're evaluating a multi-unit in the complete wrong way because they're looking at it just today, because that's the society we're in, just today. The big money's not made today. It's made in 10, 15 years. And you have to have patience with it.
Yeah.
That's my rant.
Jason, I love it. You're speaking my language, man. So, all right, we do got to move here though. So
yes, go on.
So I love the mindset for those who are caught up in I need to earn, X cash on cash. Like, go back and listen to the last 3 minutes there. But let's jump into Bucktown. So first off, let's start. We have an out-of-stater looking. They're interested. They're pulling up on the map. Let's start with the borders. Like, what are the borders of Bucktown?
All right, so if you buy one of those nifty, you're a new renter, and like I'm going to buy a Chicago map of the areas, the 77 areas. Bucktown officially is from the 606, the walking trail, the Bonneville. It's north to Fullerton. It's west to Western. There's no such thing as West Bucktown.
And now it's Palmer Square though. It's get its own other name.
I love Palmer Square. That's a fantastic area. And it's east to the highway. That is official Bucktown. However,
what about that little section on the other side, like to the river? Not that there's much residential there, but is that technically Bucktown or no?
No, so north of Fullerton, that little spot. So like we're Fullerton.
The crazy intersection there, Fullerton, Elston, and whatever the other.
It's not Bucktown.
Okay.
No, I got to see the map what they call it, but it starts getting into Bricktown, which is like the old which is what they call that part of old Roscoe Village. It's weird, but that's not. Fullerton's the car.
Okay, cool. All right, so it's like geographically, this is a very small area, right? Like you're not working with much here. You have, and it's not even squares. Like you have the highway coming out.
9 blocks. It's small, and then Kennedy comes up, so it's like it's kind of like a 90 with Western being the Western being the backbone. It's kind of like a 90-degree angle because of how the Kennedy comes in.
Yeah,
like a triangle, like a 90.
So what is it in this small little area? Like, how are you finding deals for yourself and for your clients? Like, just macro level question here. Like, small area efficient.
I got to tell you, the best way to find deals, you would think would be like the door knock and go around, but the best way to find deals, honestly, is just having relationships with all the brokers that like call Bucktown their home over the last 15 years. I gotta, and I'm not saying this because I'm a broker, but if you're searching for a multi-unit and you're not using a broker, man, it's really tough because everything is trading off market. It is in Bucktown for sure, man. It is a tough market because not only is Bucktown great for year leases, Bucktown is a great short-term rental play because you've got the blue line coming off O'Hare. You've got a great downtown. If you're only 2.5 miles from Wrigley, which I've made that walk, it's actually not that bad. when I couldn't get an Uber. And you've got Division Street. So you got another high street. Like, the high streets are basically where all the retail is. You've got Damon, North Avenue, Milwaukee's coming into its own, like really coming into its own. And then you've got Division. And I'm the north end of Bucktown, so I'm on 8 and Lane. And I got to tell you, man, Western is going out. New restaurants. I mean, so the multi-unit business there, the short-term rental market, it's just tough. And that short-term rental, that Airbnb market, that's really compressing cap rates because people are not really looking at years, and people are starting to. I have a lot of clients that will buy 2 flats and 3 flats that are on a year-to-year rent and convert them to Airbnb and sell them as Airbnb cap rates versus a year-to-year rent, and that's really compressing the cap rates and raising prices too.
And they're finding a buyer pool for that too.
I do. I have so many. I literally have. That's coming out of my ears, man. I probably do, 2 to 3 million a month just on short-term rental acquisitions for people in California, for people here, Wisconsin. I just got a call from somebody. I don't know what state she was in. I don't know. It's 336 or something. I mean, it's a huge market. That's for me. That in Bucktown, there's just a huge movement to short term. No one wants to deal with RTLO, and no one wants to deal with it. So the more restrictions that the residential tenant and land ordinance puts on owners, and the less as a landlord, as me, the less control I have in my own property, people are turning to Airbnb because you don't have to do RTLO, right? You can pick, you can restrict, it's a much different ballgame, and people leave. And if they don't leave, you have insurance, over $1 million insurance, Airbnb on people that are not leaving and their credit cards are on. So I've seen a huge move that way in Bucktown.
Yeah, anyone listening wants to learn more about that. We had Jessica Ryan in episode 143 talking about short-term rentals from the legal side of things. So it's a good episode if you want to jump on board with what Jason's saying here.
Yeah, and understanding what you can and can't do.
Yeah.
Yeah, that's been a big movement that I've seen. It multi-units across the board, but really in Bucktown too.
Well, talk to us about the other part of this episode is going to be about Wicker Park. Like, talked about just south of there. Kind of give us the borders and we'd love to kind of hear the differences in your opinion of the 2 neighborhoods.
I gotta say the differences and not get myself into trouble. That's what I gotta figure out right now. All right, so let's talk. So Wicker's going to be 60622. Like, let's talk about today's borders. So that 606, which is actually 606 to North Avenue to Division is Wicker Park. However, now Bucktown, if you buy something on the 1700 block of Hermitage, you live in Bucktown, right? And also the schools are cut that way too. And so the schools and the zip codes are all cut on North Avenue. So North Avenue is really the cutting point. And you got North Avenue to Division. I like to say Wicker goes, I kind of do it by price. I know that sounds crazy, but the minute you get past 1000 South, the minute you get past Augusta, pricing changes. So to me, if pricing changes and rent changes, the neighborhood changes. That's how I look at it when as an investor. So from North Avenue, 1600 to 1000, only 6 blocks, right? That 6 blocks is the heart, most expensive buildings. You're in the historical area, and you're also getting the highest rents. The minute you pass Augusta, the rents start to change a little bit, and you start getting into Ukrainian Village, you start getting into Westtown, and then you've got Chicago, and then Chicago to Grand is kind of its own thing, because you're distancing yourself from the blue line. As you distance yourself from the blue line, the pricing is going to change on Airbnb, on short-term and on long-term rents. And the highway starts to go a little bit east on you. So that also starts to change the dynamics and pricing, since we are talking about multi-units. So to me, the most expensive multi-units, and we're talking about Wicker Park and Bucktown, the most expensive price point is going to be Armitage to North Avenue, and then North Avenue to Division prices out about the same as Armitage to Fullerton. And Armitage to Fullerton started to change. We talk about bigger buildings because the school district is really starting to take hold on the place, and that will govern renters that want good schools. And then the prices, when you go south of Augusta, the prices start to change too. But Wicker Park is fantastic. I mean, it's a much different inventory. Wicker Park has a ton of Chicago common and old 1816 and 1920 buildings. So Wicker Park hasn't changed as quickly as Bucktown because Bucktown was mostly frame and crack. So it was very easy to tear down Bucktown and rebuild new. But Wicker Park, a good 40% of Wicker Park is governed by the Wicker Park landmarks. And landmarks in Wicker Park, it's their next level. Like, a warning to anyone that wants to do anything in Wicker Park, do not buy a landmark building. You will literally have 2 years of fights on your hands, if there's a doorknob that needs to be changed outside.
So can we talk a little about that? What, let's say you bought a building. What are some things to look out for? Just some high level ones.
Well, start back for FS. Is that something that's disclosed in the listing? Like, if someone wants to know.
It's disclosed. Like, well, I don't know. You don't have to disclose that you're in landmarks, but if you're a good broker, do not waste your time, and you must say it, because the last thing you want to do is put something under a contract, and then you go to say, hey, I'm going to bring somebody in to take a look at it. This guy's like, you're in Wicker Park landmark. I said, if you want to change a window here, it's 5 community meetings, 17 push-ups, and a 5-minute mile you got to. I mean, it's insane. So I would tell people, you need to be extremely seasoned, and you got to have deep pockets if you want to buy anything in landmarks. They're gorgeous. I love them. They're the greatest thing because that is where the National Polish Consulate was. That's where Bucktown got its name, everybody. Bucktown is goats. It was all the Polish consulate with their goats outside of their house. So Bucktown is Goat Town. But the buildings are phenomenal. And I love what Landmarks does because it does preserve that. But that being said, the ability to move that area forward and really get some pricing power is tough because of the landmark designation in Wicker Park.
Man, good stuff. Something I was completely unaware of. So,
oh man, it's tough. You have the goal. If you want, let's say your stair. This will be a high level. Let's say your stairs need to be refurbished. You can't touch the stairs until you go to the Chicago Museum on Clark and Lincoln, right off the Gold Coast, right by Latin. You have to go there and find photos from the 1800s of the front of your building. If you can't find photos, you can't touch your stairs. You have to find the original photos. If you have to take it back, anything you do thinking in the front, you got to take it back. So the rule of thumb is anything that's visible from the sidewalk, you cannot touch without 5 approvals.
Seems a little, I understand the restoration wanting to keep these buildings. It seems a little overdone though.
It's way over the top, man. It's way over the top.
So
I could talk hours about landmarks at Wicker.
So real quick, just at a high level, like you're still seeing value there. Do you still see both Wicker and Bucktown? Do you still see the next 10 years, 15, 20 years that this is going to continue to grow and it's not played out? Like you still see a good upside there.
Yeah, I mean, it's a blue chip, right? It's not, it's not East Lincoln Park, on the 400 blocks of Deming and all that, but it's an Apple, it's an IBM, it's solid. You're not going to get massive dips. You're not going to get a huge run. You're going to have no vacancies at all. You're constantly going to have extreme, as the market may soften here or there, the school systems are going to help the rents continue to say burn and go up because Burr and Pulaski continue to get a ton of attention. So as these school districts get more and more sought after, if there is any dip in the market, it'll be uplifted by those districts.
Got it. So in we talked before, Jason, stepping outside of Bucktown and Wicker for a second, we started talking about up northwest by me. You have you're placing some bets up here as well. What are some areas up here that you're excited about?
I love anything next to Kilbourne Park, period. Anything. I know it's crazy, but since I bought in Bucktown in the late 90s, and since I also lived in the city, so when I, in the 80s, you couldn't go west of State Street. I've seen this town, how it moves. And there's three elements. When I look at a property, and I have friends that look at a property, and Kilbourne hits these three up. Kilbourne hits Kilbourne Park, south of Irving, north side of Avondale. It's two.
This is my pocket, man. Continue. My parents both went to Schurz. You're there, man.
You're gonna make tenfold on your investment when all three of these are filled, and you're at 2. Okay, great parks and great public transportation. Once that happens, you start grabbing dual income families. Once the dual income families come in, people stay there and have multiple kids. They start pressuring the schools. Once the schools get a little bit better, once you have the parks, once you have the transport, the public transport, the next thing that happens is all the retail stuff. Once the retail starts popping up, it's over. That huge pop is probably done. You're 2 or 3. You're not at 3 yet over there, which is great. That's why I'm putting money there. But once you get to 3, that big pop is done. When I'm talking a big pop, I'm talking, lots go from 180 to 400. That's a big pop on dirt. You're going to have 100%, in my opinion, in the next 5 to 6 years, you're going to have 100% appreciation on dirt where you live. Then the rents start coming in when it goes in. So it's a long-term play. I land bank. We talked about that. I buy little houses. I put renters in there. I don't worry about making money. Just pay it on the debt service. And I just sit on oversized lots, 30s, 40s, 150D, 25 150s. And I just sit on that land because that's the next thing. And then once it happens, and then it goes. And then you try to find out. I mean, I love that area. I love everything north of Lawrence. I love that area too.
Yeah. Real quick before pivoting there, man, just to piggyback on some of those comments, they have the metro that's being redone there, the Grayland stop right off of Addison. And then you talk about the big lots, you go down some of those streets, call it going south from Irving. You got Kildare, Tripp, Keeler, you feel like you're in Elmhurst. Those are 40, 50-foot lots, just every single lot.
I call them, remember the Houston, the Killer Bees? When I'm in Old Irving, I call it the Killer K's.
Kenneth, Kilmore, and all those, yeah.
Anything on a K, buy it. Anything on a K, buy it.
Yeah, it's a great little pocket there. For those who don't know it, you get off at Irving, get off the expressway there, go west, and then turn down any of those streets running southbound. It's a beautiful little area there. And then you keep going west, you get to Six Corners.
You're starting to see $2 million trades, $1.5 million, $1.8 million, $2. I'm telling you, you're going to start to see. They're starting to see by Kilbourne Park and Standard Lodge. You're starting to see a $1.1 million, $1.2 million. This is how Bucktown was. This is how Wicker Park's going. This is how they all have the same formula, right? It's literally rinse repeat on these neighborhoods. But Bucktown's always going to be south. There's just too much retail, just all the transit, the blue line going to O'Hare. I mean, it's just too centrally located. You can get to every neighborhood. It's too centrally located. I'll pop to Roscoe Mead. I'll pop to Woden Square. I'll pop to West Loop or I'll pop to Wicker Park. Bucktown's one of the only places where you're not landlocked because you've got Ashland, Damon, and Western, and you've got Milwaukee that cuts through. That's what makes Bucktown unreal, is the ability to pop everywhere. And that's why it's a great place to invest money. But if someone's looking for a 200% return or, depending on what your portfolio is, that pop has happened. That pop happened from 2000 to probably 2010, 2011, right? That big first pop happened. However, if you own something by you, or you own something in Pilsen, you own something at East in Rogers Park or or Buena. I love Buena Park. I was hoping in Buena Park. You know, it's nice to have a solid asset that doesn't cost you like East Lincoln Park does, but still gives you that 6 to 8% every year like clockwork. And you're never going to have vacancy. So like, to me, it's just a solid bet. And coming from my trading background, to me, it's a solid company. I'm always going to give returns. I'm never going to have these ups and downs. It's not a fringe neighborhood. Now, I own in fringe neighborhoods because you want to diversify your assets. But to me, Bucktown and Wicker Park are just super solid. I love Wicker. I just can't deal with landmarks. So when you get outside of landmarks, sometimes Wicker is a little, and there's a lot of multis in Wicker. I love having crappy multi-units on streets that have $4 million homes.
Yeah. So what's your take, just the overall macro look on Chicago, right? It sounds like you're bullish, but you know, we obviously have some headwinds against us, you know, whether it be taxes, crime, whatever it may be. You know, you have an honest investor that you're talking to from the broker side. He's saying, I don't know because of those, you know, reasons X, Y, Z. What is your response to that?
Where do you live? If they say California or New York or Florida doesn't have many swings anymore because there's actually people that are living there that are not going to move. But you ever talk to anybody what the cap rates are in New York and Florida and California? If you can get 2% in California, you're like, you're hitting gold. I mean, there's no affordability there. And on top of it, on a price per sale. So I'm not saying it's the highest rent in the nation. It's not. But for acquisition cost and rental, Chicago is the cheapest place to buy with the highest rents on average. That mix, that ratio, there's some podunk town. Don't get me wrong, but it can be better. I'm talking about a major metropolitan city. There's nothing better than Chicago. There just isn't. And we're not tied to one industry. We're not tied to entertainment. We're not tied to second homes in Florida. We're not tied to finance in New York. There's legal. The tech that's coming into Chicago is fantastic. But there's just a diversification in the jobs, which is what makes me feel a little safe. When tech is bad, it's okay. We have so much other stuff that's here. So that's kind of for me what I think. But I always tell people, like, you know, I got a buyer that buys places down in Tennessee and buys in in Chicago. He's looking for different things, but it's just so cheap to own here. It just is. And if the market drops 10, 15, 20%, I don't know how that could happen because there's no supply. And I was raised on supply and demand graphs because you cannot fake that. But if it didn't drop that much, the nice thing is that you can buy a real nice building in Chicago for $600 to $800. And no matter what happens, always going to find rent that can cover that. That's why I say it.
Stop. I love it. Cool.
That was my extended answer.
No, that's
Good answer. Good. Mark, anything else to add here? Are you ready to wrap?
That's it. You ready to wrap, Jason?
Yeah, it's up to you guys.
All right.
Do it here.
What is your competitive advantage? How have you been able to do this and be so successful in Bucktown, Wicker Park?
My math background, to tell you the truth. And I'm extremely confident in my abilities. But my math background has been my biggest saving grace. Take calculus, everybody. It helps you in the long run.
There you go. Get to the derivatives in the finance plan.
Get to
that point, you're doing all right. So, you alluded to this several times here, but you know, concise 30-second answer of what is one piece of advice you would tell someone that is yet to buy their first property here in Chicago?
The biggest thing I could tell you is don't listen to the noise. Listen to your gut. If someone gives you advice and they're not giving you the down payment or paying for the place, take it like a grain of salt because they're not in your head and they're not in your body. And not everybody has the same risk tolerance that you do. And don't let someone being on the sideline put you on the sideline. They're on the sideline because they can't handle it. Why would you listen to somebody that can't handle what you want to do? That's literally what I tell everybody.
Damn, I love that.
That's a good one.
My dad said, if my dad said, I have so many dadisms, and when your dad passes, you remember all of them. My dad used to say to me, if someone's not going to take your place in the grave, take it with a grain of salt.
There you go.
All right. So what do you do for fun, Jason?
I literally love watching my kids play sports. Does that make me a loser? I'm so sorry.
No, man, what are they in? What are they on baseball season? What's going on here?
Yeah, so my oldest son, congratulations to him, finished his first season at Walter Payton High School in basketball, and he is literally, it's 3:25. He's about to start tryouts in 5 minutes for baseball. He also plays travel basketball and baseball. My 12-year-old is my maniac. He's on one of my podcasts. He's really fun to listen to. Pitcher, like just crazy in the head. He basketball and baseball, and I just got my 6-year-old into basketball, so that's been kind of fun too. But I just love spending time just with my kids and like just watching them, and just kind of like my dad died early, so just kind of making sure that I take all these things in and make time for them, whatever it is. And to tell you the truth, the other thing I love, I mean, other than obviously hanging out with my wife, because I don't say that, she'll shoot me. The other thing I love is I'm a gym freak. I just love going there, and I know this sounds crazy. I honestly think it's very impossible for someone to be extremely successful that doesn't take care of their body. Not because you have to be an Adonis, the mindset that goes in to challenge yourself, to fight yourself in the gym, I think is one of the most critical things that a person needs to do to be self-employed and be success.
Yeah, we've had that come up multiple times now. Like you can definitely, you took the 200 guests we had. There's definitely a correlation there.
Yeah, I think you have to challenge yourself on a daily basis and push yourself. And you're not going to win. Like you're going to have bad lifts, you're going to have bad games, but knowing that, hey, tomorrow's another day, I think athletics, working out, sound body, sound mind, I think it all correlates. It does for me. But that's it. Watching my kids, hang out with my wife, and working out. That's it. I'm not a golfer. I don't drink that much. That's about it.
Good stuff. All right. So what is it? Either a good book, podcast, or self-development activity that you'd recommend to our listeners?
Oh my God. I'm going to tell you the best book everyone has to read. And I'm going to mess up the author. He's got a crazy name, but I'm sure you know.
Ownership.
Yes.
Jocko Willink.
Jocko? Oh, yeah.
It is a must read. It is a must. I got the kids version, and I make my kids read it once a year. It is an unbelievable book, because when it comes down to it, if you fail, you fail. No one else failed. You fail. And I think the biggest problem we have with everybody in this world is people do not take ownership of their failures. And it's the biggest problem that we have in society right now. And I'm in love that.
Staying on that parenting train for a second too, like that's been the biggest help with that book is on the parenting side, right? When your kids do something, instead of getting mad at them, like, okay, well, this starts with me, right? And then like looking through that lens, and it's like, oh, like you think about things a lot differently.
My son lost a game. He had my 12-year-old had 4 games this weekend. He lost one, and he got in the car, and he's 12, so I accept this, right? He got in the car, and what do kids want to do? Oh, this person next, this person that, like a broker. Oh, this didn't happen because of this. This didn't happen to this. And I looked at my kid and I said, what did you shoot? He's like 7 for 10. I go, how much you guys lose by? It was like 6 points. I go, what happened to hit those 3 shots? He goes, we win. I go, then it starts and ends with you. I just don't, I have no patience for excuses at all. Like to the point where I fire clients. Like I have no patience.
Good stuff.
Awesome. All right. Besides yourself, name one person in your local network you'd highly recommend to other Chicago real estate investors.
A person that I know that I think that'd be good for people to talk to.
Yep. Attorney, lender, architect.
My attorney, Seth Kaplan, who I use pretty much everything, is fantastic in development and fantastic in multi-units. He owns them himself, so it's a very good mix. And I have a fantastic home inspector, Jeff Swanberg. I'll throw him some kudos too, who really can control a situation and say, listen, I have to say this, but I wouldn't do this. Like, he's not afraid. I love people that aren't afraid to say the truth. As bizarre as that sounds, he's not afraid to say the truth. And I think a lot of people don't want to get, don't be upset if your client gets mad at you. You're telling them they're not right or they're stupid or this or that. So Jeff and Seth are great people. I have a couple great lenders, but if I name one, I don't need them all. I'm going to get livid.
Yeah, you got to keep that. You got to keep that. Keep all the kids happy. Yeah. But we'll link to both of those guys in the show notes. Jason, thank you so much. You provide a ton of value to our listeners. How can they learn more about you? You mentioned you had a podcast. Here's your chance to drop all the information you would like, and then also is there any way our listeners can provide value?
Everything I have is going to be on. I have a really nice YouTube station, so if you ever want home tips, my podcast, all that is on Clopas Stratton Real Estate. Or you can just go to clopasstratton.com and there's like a spot where my podcast is and a bunch of other stuff. And we shoot the shit like we just did right now. I mean, and just talk about other things I'm going to have a really big time commercial broker on Friday. We just talk about the market, talk about the bulls, whatever. But you can always reach out to me too. 312-415-1551. My phone is always on. And any questions, I don't mind answering questions, even if you don't want to have a broker. I don't, whatever, reach out, it's fine.
Good stuff. Mark, are you ready for the Chicago fact here?
I'm ready.
All right, so who's playing for?
We're playing for Drew Drandanopoulos. It's Drew, the Greek guy.
I'm the great guy, dude.
Coincidentally, we got 3 Greeks here. So play for Drew out of, looks like it might be, neighborhood-wise, looks like it might be Westtown. So,
all right. So, Jason, Mark gets first crack at this, then you. Before I asked the question, though, I had an original question, and it was going to be, where did Bucktown get its name?
The goats. I was ready for it, too.
I actually knew that one. I don't know why I knew that, but I had a bunch of silly options for you to see if I could trick you. So on the fly here, I grabbed one. I have, listeners, I have a bunch, 4 or 5 of these stored in case that happens. So a little pivot here. So has nothing to do with the episode though. So Mark, and then Jason, you'll get a shot as well.
Okay.
Ace Hardware, its headquarters located in Oak Brook. It's also named after an ace firefighter pilot of World War I. He's able to overcome all odds. It's now turned into an international company with over 5,200 locations. Out of those 5,200 locations, how many Ace Hardwares are located within the city limits of Chicago? I'll give you multiple choice. Are there 8, 16, 32, or 64? How many Ace Hardwares within the city limits of Chicago?
I know probably 8 of them. I would say 16.
Jason, what do you want to go with?
And after 16 was what, 33?
32. We just got Dublin.
I'll go 32.
16. Mark, you got this one.
All right.
I would have done 32 or 64.
Yeah, no, that's, I would have, yeah, no, I purely guessed, but I knew of at least 8, so I don't know all of them, so that was my only punch there. So, all right.
There's a total of 204 in Illinois, and there's actually 4 states, California, Texas, and Florida, all have more than us.
Gotcha. All right. Well, Drew, you get a $50 gift card. Thanks to us getting that question right. Tom, thank you for making it easy enough for Drew to win. So, Drew, just thank you for coming on there and buying a Straight Up Chicago Investor t-shirt. We appreciate you supporting the brand. So, Jason, awesome time today. Tom, awesome as always. Listeners, head over to Straight Up Chicago Facebook Club, where we're trying to add different resources there and seek different feedback from our Straight Up Chicago community. We have about 1,700 people on there right now, where we're always looking to share resources, share best practices, share different opportunities that one person might be trying to work with somebody else on. So check that out. We're going to be also promoting on there some of our future changes we have coming up on the website, including building your team. We have a website where we'll have a bunch of different resources on there of different trades, vendors, professionals that we refer out, and then also we're working on off-market property thing, our off-market properties page on our website as well too. So check it out, stay on the Facebook Club, and you'll be able to see all those updates. Jason, thank you as always. Tom, thank you as always. And listeners, we'll see you next week.
Thanks all.
Thanks.